Hello and welcome. Today we're going to tackle one of the most critical and honestly one of the most overlooked parts of trading, knowing when to actually take your profits. Okay, let's just dive right in because, getting into a trade is one thing, but getting out with a win, that is the name of the game.
So picture this. You've made a great entry, the market is moving in your favor, and you're seeing green on the screen. Awesome. But then that big question hits you. You get that mix of excitement and, let's be real, a little bit of anxiety. Do I sell now? Do I let it run a bit longer? What if it reverses on me? It's a feeling every single trader knows all too well.
And this brings us to a fantastic, if kind of quirky rule to live by. It's from Zombie and Rules of Survival #22 of all places. When in doubt, know your way out. Now, this isn't just about surviving a zombie apocalypse, right? It's about surviving the markets. You absolutely have to have an exit plan before things get crazy. So, how do we actually create that plan? Well, that's where the hero of today's explainer comes in. Let me introduce you to a really powerful tool designed for this exact purpose: Fibonacci extensions. This is how we start to replace all that guesswork with a real, structured strategy.
So, what is this thing? Well, put simply, Fibonacci extensions are a technical tool that helps traders pinpoint potential profit targets. It basically takes a recent price move, waits for a little pullback, or what we call a retracement, and then it projects future price levels where the trend might continue. It's all about finding logical places to cash in on that winning trade.
All right, let's start with the most common scenario. You've bought into a rising market, an uptrend, and now you're looking for the right spot to sell and lock in that profit.
And you know what? Using this tool is surprisingly simple. It's really just a 3-click method. First, you find a significant bottom, a swing low, and you click on it. That's click 1. Second, you drag your mouse up to the most recent top, the swing high, and you click there. That's click 2. And then for the final step, you just drag back down and click on the level where the price pulled back to. 3 clicks, and that's it. You're set.
Now, let's see this in action on a real chart. So here we have a daily chart of the US dollar versus the Swiss franc. We apply the tool by selecting our 3 points. First, that swing low. Then we go up to the swing high, and finally back down to the retracement where the price pulled back. And just like that, the tool projects these potential target levels right onto our chart.
And what happened on that chart? Well, the price rallied right up and hit those key projected levels, the 61.8, the 100, and the 161.8% extensions. They all acted as resistance. They were fantastic places to take some, or maybe even all, of your profits off the table.
Okay, so that's how it works when you're buying in an uptrend. But what about when you're on the other side of the trade, shorting in a downtrend?
The great thing here is that there's really nothing new to learn. The logic is exactly the same. It's just flipped upside down. Instead of looking for resistance levels to sell at, you're now looking for potential support levels to buy back your short position and lock in that profit. Simple as that.
Let's look at another example. This time, we're on a 1-hour chart of the euro versus the US dollar. We use the same 3-click process, just inverted. We start at a swing high, go down to a swing low, and then back up to the retracement level. The tool then projects potential support levels for us down below the current price.
And on that Euro/USD chart, you can see the price did exactly what we were hoping for. It fell and found some temporary support right near those key Fibonacci levels. The 38.2, the 50.0, and the 61.8% extensions, they all acted as little bounces, which would have been excellent opportunities to exit a short trade for a nice profit.
Now, as powerful as this tool is, we need to have a really honest conversation here. This tool is a guide, not a guarantee. It is not a magic wand, and there are some important realities we absolutely need to talk about.
This is always the first question I get. I mean, you see all these potential target levels on the chart, and you naturally start wondering, which one is the right one? Which level will the price actually hit and then reverse from?
So, here's the honest truth. There is no way to know with 100% certainty. Any of those levels might act as support or resistance, or, hey, the price could blow right through them. Trading is a game of probabilities, not certainties, and this is a perfect example of that in action.
And this leads us to the second and equally important question. The tool's output depends completely on the points you draw it from, so which swing low and swing high are the correct ones to use?
And again, the honest answer is, it's subjective. There is no single right way to draw them. Choosing the most significant swing points is a skill. It's almost a form of art that requires your own discretion and judgment.
The good news, though, is that like any skill, you get so much better at it with practice and just screen time.
So let's bring all this together. We've got a powerful tool, but we also know it requires some skill and judgment to use it well. So what's the key takeaway from all of this?
You know, the most important thing to remember is that Fibonacci extensions are a fantastic guide. They really help you move from emotional, gut-feeling decisions to a structured, planned approach for taking profits. But they are not, and they will never be a guarantee of success all on their own.
And that leaves us with this final thought, which I think just sums it up perfectly. It's not about being the smartest trader, and it's not about having the strongest nerve. The real key to unlocking your potential in the markets, and in using tools like this one, is continuous effort. It's all about practice, observation, and refinement. So keep practicing, and you'll find your way out.